How many of you have been hit with this dilemma where maybe you get paid a lump sum of money and then you want to put it into the market? Maybe it's a tax return or something like that. And there's a lot of speculation about whether it's better to just put your money in the market in a lump sum just right away if this happens for you, or if it's better to dollar cost average it, meaning like let's say that you get $1,000 for your tax return. Is it better to put that $1,000 in the market just boom right now all at once, or is it better to take that and put $1,000 a month every month for 10 months? And I want to share. So I've done some lump sum investing like that, and I've always ended up regretting it, even though they say that it's better to do that because your money in the market's better than it not being in the market. So I'm going to give you some examples of when I did, and I'm also going to share what I do now. That's kind of a mix of both. So a while back, Bitcoin was at like 105,000 or something like that. And just to be clear, Bitcoin is not really investing; it's speculation. It's like because we don't know what this thing is going to do in 20 years. There's no history of it, right? And anybody who says that they know for sure, it's like I don't believe them. You can choose to do what you want with that kind of information. But anyway, so Bitcoin had this all-time high. It was somewhere around like $105,000. I might be a little off. Don't quote me on that, but it was somewhere around there. And then I was paying attention to the price, and I saw that the price of it was going down, and it got down to like 96,000. I was like, okay, it dropped like $10,000, and so I'm thinking, cool, it's gone down. It's going to keep rising up now, and I had $1,000 that I could, put into the market or put into investments at the time. And this is just a couple months ago. It's like in February, and so I just put $1,000 into Bitcoin, and like just one transaction, right? Just bought it all at that one price that it was listed at. I think it was listed at 96 when I got it, and ever since then, my Bitcoin portfolio has been negative because it hasn't hit that mark that I bought it at since. So I put this lump sum in, and then when I check it, I see that it's gone down. It's gone all the way down to like 70 something, 75 since then. And now it's back up around, high 80s. And so it's like, but I still lost money since that initial investment, right? And and this is the reason I don't like lump sum investing, because just because that happens, it doesn't mean that it's the wrong thing to do. If you're doing this in like the S&P 500, or if you're doing this in, ETFs, index funds that are proven to perform long term, even if you put it in at the top of a peak, and it goes down, well, it's going to go back up. Just let it sit there. But emotionally, that's hard to do. Have you ever experienced this yourself, where you buy something at the peak and then you sit there and you watch it just go down and down and down over the next days, weeks, months, until your emotions are just pulling at you so hard that you're like, I'm just going to pull this money out and I'm going to put it in, I'm going to sell, and I'm going to put it into something else that's growing right now, that I can see that's growing right now. Well, this is the solution for this, in my opinion. This is what I do now. So I dollar cost average. That's when I put a specific amount in every month, no matter what. But I also do this thing called dollar cost averaging in. And so let me give you an example of what I mean by this. Every month, no matter what, I put $1,000 into the market every month. It usually ends up being more than that, but let me explain why. So, but 1,000 is my minimum. Like that's going in there no matter what. And so what I do is I look at the market on the day that it's usually the first of the month that I put my money into the market. I put the $1,000 in, but I actually have 2,000 that I can put in. I actually have 2,000 that I can put in. It just depends on what the market's doing. So the first day of the month, no matter what, I put 1,000 in, no matter what it's doing. And so then I look at the market the next day, and then I say, hey, did it go down? Did the price of everything that I just bought go down? Did it go down by 3%, 5%? That's been happening a lot lately. If it does, let's say that it went down 5%. Most of the stocks that I'm putting my money in went down on average 5%. Well, I would put like $300 more into there. because the price is a little bit lower. And if I check the next day and it's down again, I put like $300 more into it again. And then if I check the next day and the price is up past all three of those buy points, then I'm like, okay, that's what you put in this month. And so I want you to imagine this. Imagine the price of a stock is, let's keep it simple for math's sake. Imagine the price of the stock is $100 per share. And that's on the first. And you get your money and you put it in when it's $100 per share. Cool. But then the next day it drops 5%. It drops down to $95 per share. If you still have money that you can put in, well, it's like if you buy this, you're lowering the price of the stock that you bought by spanning your purchase out over a few days and seeing if the market just drops from volatility. And if it does drop from volatility because things are just going up and down, capitalize on that and buy a little bit more and buy a little bit more. And I'm prepared to do this every single month. So I put money into the market every month, but when I put it in, I do it like this. And that money is going in there for the long term. I don't plan on selling it when I see a spike that goes up. I'm putting money in for the long term. And the way that I'm introducing those funds into the market is this way, so that I don't do the same thing that I did with that Bitcoin, where I buy it and it's at a peak. I put all the money in, and then I feel like, oh, I shouldn't have bought it at that time. See, because here's what happens when I dollar cost average in like this. I put money in, and then I see that the stock goes down, the price goes down, and I say, cool, I have an opportunity to make money in the future by buying more of this right now. So there's two things that can happen after you buy a stock, right? Either the price goes up after you buy it, or the price goes down. And so you buy a stock, you see the price go up. Cool, you made money. Just chill. Don't go buy more, right? If you're dollar cost averaging every month, you put your thousand. If I put my $1,000 in and I see the price goes up, like by the next day, it just shoots up like 5, 6, 7%. Cool. I'm not going to buy more at that price. Just chill out. And or the other thing that happens is you see the price go down. If the price goes down, cool, I'll buy more so that I can make money later. Either or is a win-win scenario. But what's not happening is I'm not putting all the money that I have to be able to invest in at one time and then seeing the price go down and then have this FOMO and think, oh, I should have waited a day. It's like I'm planning for that. I'm planning for, like, the stock could probably just go down. And so this way I don't feel this, because when it goes down, whether it goes down or whether it goes up, it's a win-win scenario because I have more capital to put in. I didn't just put it all in one transaction. So hopefully this helps. This is called dollar cost averaging in. I've been doing this probably like the last couple months myself. I didn't even know that there was a term for this. I learned from that Bitcoin experience and really didn't like it. And I started just doing this. And then I saw on another YouTube channel, this guy was talking about this, and that's what he called it, dollar cost averaging in. I was like, oh, that actually makes sense. That's a cool term for it. But anyways, dollar cost average in, it's going to help make sure that you get on average a lower price for the stock that you're buying, instead of just lump summing it all in on one day. Hope this was helpful for you. We got some other videos here for you to check out. Boom, one right there, one right there. If this was helpful, or if you learned something, make sure you like the video. It helps with the YouTube channel all around. And we'll see you guys in the next one.